Good afternoon, ladies and gentlemen. Obviously, current members and potential new Full Throttle members. Let's go ahead and get airborne with our accelerated retirement. What a great day so far. A lot of stuff going on in the market, and we have a lot to cover. A lot of trades that I want to get closed, take a look at some open positions, talk about some earnings, talk through our strategic mindset, all that good stuff. But first thing I wanted to do is welcome aboard the first three new members. So two folks yesterday, I'm not going to say snuck in because they didn't, because if you've been looking on the replay page, there were buttons on there that I left up. So Gig and Gregory jumped aboard yesterday, and then John from Texas just snuck in as well. So there's the first three. We were going to have 50 slots open today at 1 o'clock. Now 47. So my hat's off to those folks for figuring it out and getting in early. So welcome aboard. But the rest of you, actually that side's wrong. But here's what you need to do. And I'm probably going to save the 20,000 slides for tonight about why you should grab your slot. So for the folks that are seriously really ready to go, here's the page. By the way, if you're looking, and last night's replay is on the page here. So this is Monday's weekly options brief. Excuse me. And we're going to look to maybe close that weekly VXX bear call spread here in a couple minutes for a nice profit. Here's the primary live trade brief from yesterday, where we took a look at that Raytheon spread. We're also going to talk about XLE in a couple minutes, but why am I pointing out the replay page? Well, it's in the chat box there, but you can push one of these green buttons right here and get to this page as well. So this is the page, and let me just take a couple minutes to talk you through Full Throttle annual memberships. Now, if we have some annuals that don't go by Friday, we'll go ahead and open these up to monthly. But here's what Full Throttle is all about. There's essentially, let's call it 3 tracks, okay? And I'll just start with, it's called Max Afterburner, where you get access to essentially everything we did this week, you're going to get access to, okay? So it's called Max Afterburner. And today we're going to do accelerated retirement. If you're not really ready to trade weekly options yet because you think they're really tactical or, they're just not your speed, there's something called the defensive track, which is everything we're doing this week, except that Monday weekly options webinar. That's why it's called defensive, okay? And it's $19.95 per year. If you like weekly options and you're really not in the mood for kind of this accelerated webinar today where we talk about longer term trades, you can do an annual offensive membership. And then obviously it ain't rocket surgery. If you want weekly options and accelerated retirement and everything you do, this is what you need to do. It's called Max Afterburner. Okay. It should be pretty intuitive. So up here, it says everything you get in each one of these tracks, right? The Full Throttle training, there's 8 sessions. From starting with this is a call, this is a put, all the way up to iron condors. You're going to get 3 training manuals. You're going to get access to the PLTB we did yesterday, urgent alerts when I send them out, and the Analyze Your Trade webinar, which is every Thursday, so that'll be tomorrow at 1 o'clock. So no matter what track you choose, you get all these. But with defensive, it's more you get the retirement portfolio that we're doing today. Offensive, you do the weekly options one instead. Max, this is what 85% of the members here at Top Gun Options do, is yes, whoever just asked that, you can upgrade whenever you want. Hey, Wiz, I ain't ready for weekly options just yet. I'm going to hang out in defensive. Yeah, call us back when you're ready. So everything is on this page that you need to know to grab your membership. If you just scroll down, here's the offensive track, here's the defensive track, what's in it, and then here's the 8 training sessions, folks. This is what you're going to get access to as soon as you join. And I strongly recommend you get in there and start watching these videos as soon as you become a member. We start with, hey, this is my trading methodology and where I get my intelligence on a daily basis and my market sources, long calls, long puts, and then we just go up from there. We take that Navy flight school building block approach from aerodynamics all the way up to dogfighting, okay? So like I said, for some of you, maybe 25% of you really new to options, this gets your feet wet. And for those of you that trade options right now or you're a Jedi Master, this stuff is going to make you better. Okay, as I said, all the manuals are on here. Really, I'm not a great salesman, so here's the page to grab your membership tonight before we before we do our full throttle sample demonstration training. I'll go into this stuff in a little bit more detail, but I know people have been calling, people have been emailing support. Hey, how do I get my slot? Now it's officially open, guys. So you can go to this page, grab your annual membership, $19.95, $24.95, or $29.95. And like I said, if there's any of these left over of these 50, I'll go ahead and release some monthly ones on Friday. Sound like a plan? And again, the marketing stuff just doesn't. I'd rather be talking about trading. So let's go ahead and press forward. Real quick, because people ask, why do you limit it? One of the reasons I limit it is because there's 1,000 people in this room type of play. We need a nice, tight, close-knit squadron of traders. We can't have live trade briefs that are a zoo. I want everybody's question to get answered. It is about the training. And we drive for performance and self-improvement here. So, all right, let's go ahead and get airborne. Monday night, folks, we did our welcome aboard brief. Unfortunately, that one wasn't taped because of a lightning strike. But I put the last one from May on board that replay page so you can watch it. Yesterday, we did a very cool primary live trade brief, so make sure you watch that replay. Right now, you are in accelerated retirement, okay? This is called AR. We call that the PLTB, the primary live trade brief. So, and I just opened the slots, and obviously it's not 50. Tonight, I'm just going to give a sample. Hey, here's the type of training you're going to get when you become a member. Remember, during these live trading sessions, during trading hours, I want to focus on what's going on strategically, operationally, and then get tactical and look at trades, existing trades or new ones. So if you have any questions, I like to say, hey man, if you have a question on the bull put spread, why don't you go watch or rewatch the full throttle training, on the member page, so you can go get a refresher on it. Okay, so you get training and practical application in these live trade briefs. Tomorrow at 1 o'clock, we're going to do, as I said, the Analyze Your Trade session. I think we're going to talk about Wynn tomorrow. So Wynn came out with earnings. We're going to talk about our SIN stocks, because today I want to take a look at XLE, CSX, and also that weekly options volatility trade. And then Friday, I'm going to give you a brief on what, if you're not familiar with what weekly options are, I'm going to introduce them on Friday and then debrief the week. As I said, if we fill up all 50 slots with annual folks, then we'll get airborne Friday with those 50. If we have a couple left over and you're interested in a month-to-month subscription, we'll go ahead and make those available on Friday. And it's a pretty high number. 95% of the folks that do a couple months end up getting the annual eventually. So it saves you a little bit more money if you just jump into that anyway. Okay, knocked out a quick intro. Let's get into our strategic and operational brief. Let's take a look at that VXX trade from Monday. Look at oil and the crude report that came out today. And this is going to be a nice teachable moment on XLE, because yesterday in the primary live trade brief, it was that bear call spread wasn't looking too good. And what did I say? Hey man, give it a day. Okay, and I was right. Let's take a look at XLE and oil in a little bit. And then our CSX iron condor, that's looking pretty darn good. Then we'll take a look at some potential new trades. AR, accelerated retirement, which you're in right now, we only go for about an hour every Wednesday. So I'm going to try and keep on time. I like respecting people's time. That's why I don't want to go full-blown marketing spiel with the full throttle slots. You can read that page when you get it. Whoever asked that, the replay, I'll post it again. Here's the replay page, folks, right here. It's pretty easy to remember. Go.topgunoptions.com/FT, which means full throttle replay. And if you watch a replay and you go, you know what, I'm ready to get on board, all you have to do is click this Enlist in Top Gun Options, one of these green buttons right here, and it'll take you to this page that I just showed you. Okay, so this replay will be posted on there eventually once we get done today. Okay, like I said, I'll stick with the marketing slides and all this fluff for tonight, because I want to really talk about trading. But every time my phone buzzes, that means there's a new member. So most likely we will get, we're going to get 50 either way, because I know some people are probably just going to sit there and get the money. Randy, where is the replay from yesterday? I don't see it on that page. Okay. should be right here. Primary live trade brief, FANG implosion review, new Raytheon bull put spread July 31st. It's right. So here's Monday's session and here's Tuesday's session. This is a placeholder. This is from our last one. I left this on here because if you're interested in what a long call so last full throttle in May, the training I did on that Wednesday night was on Raytheon, and we did a Jan 20 long call diagonal. So I kind of left this on the page as a little bit of a cool thing. So if you like Raytheon and the way we talked about it yesterday and you want a defense stock, this is a little bit of a bonus for you. If you have some time today, watch this one. This one's pretty cool. But we're going to do training tonight. So, all right, guys, I want to press because, like I said, I want to keep us on time, and we have a lot to talk about. We covered this already, isn't it crazy? It's Wednesday afternoon, and it feels like it's been a year since Monday, since everything that happened Monday and the FANG implosion and Trump saying I'm going to I'd meet with any of these dudes anywhere. It's the week ain't even over yet. So that's why a little while ago, this VXX spread was down here at 5 cents. I was going to send out an alert to get out of it. And now VXX. So we're going to hang on to this. We'll talk about this in a little bit. I need to avoid getting too tactical and breaking my own rules right now. But volatility, VXX is starting to smash, and we're going to look to close this here in a little bit. Why am I saying that? Hey, man, just like the guy in the song said, go on, take the money and run. We've been in this week, 2.5 days, and Friday is a world away from today. So when we're talking about weekly options, I like to stick, and remember, I'm going to teach you guys when you're here at TGO that we have an SOP. So just like I have adjust and eject criteria if a trade's going against you, we also have an upside SOP that says, hey man, if you're seeing 70, 80, 90% profits, if you're seeing a 7, 8, or 9 in front of any credit spread, like the guy in the song said, go on, take the money and run. Okay? Especially in a weekly trade. I don't know how many times when I started trading weeklies back in the day, I'm like, this thing's got time. I want to squeeze every dollar out of this thing by Friday, and then something happens and it blows the trade out. So this is pretty cool. Bill, sit rep always been this absolute game around the percentage. Bill, that's not necessarily true. I put out the percentage gains. Okay. So the percentage gains are obviously a percentage is a percentage. But I think you're talking about the dollar amount. So obviously in our model portfolios, in most of our trades, we don't want to risk more than 5% or $5,000. So, but the percentage gains are still the same. Does that make sense? Regardless, guys, what I'm getting at is, being short volatility right now, short term, I think is a good trade. We had a little bit of a freak out. Now we're coming back in, but there's nothing to say by Friday Donald Trump doesn't tweet something, some Iranian thing happens, and volatility or the VIX goes through the roof. So whenever you're shorting volatility, man, as I showed you this famous, hey, let's all short volatility here. Whew. Market implodes and all these people got wiped out. So as we're going through the webinar, I'm going to try and keep one eye over here on VXX, and let's see if we can get out of that thing. Like I said, it was down here at 5 cents a little while ago, and that was a $1,200 gain since Monday. So, all right. So here's what's interesting, ladies and gentlemen, is the Rob, you're right. It's for next Friday. I'll fix that when we cover it again. Stocks and yuan surge after U.S. and China said to restart talk of trade. Remember, folks, Steve Mnuchin, our Treasury Secretary, said a couple weeks ago that, hey, we ain't even talking. I was shocked that the market didn't freak the hell out back here. Larry Kudlow, Peter Navarro, Steve Mnuchin, nothing going on with China. We're at war. That ain't good. Look at today's headline. And, well, actually, let me read the first sentence first. It took less than a day for the latest trade war ceasefire with China to crash and burn. Just hours after reports spread that Trump is considering more than doubling the $200 billion, China vowed it would retaliate and warned against blackmailing and pressuring it. China vows retaliation to U.S. blackmail if Trump hikes tariffs. And I briefed my TGO members a couple weeks ago on what? China said, we're not only going to respond economically, but in other ways as well. That's kind of a creepy threat from the country that really, really, really is our adversary. Rick from Estero, Florida. Rick, welcome aboard. Annual max slot. Rick, next time I'm over in Estero, I'll buy you a beer. My two boys play hockey, and I spend half my life in that rink over there in Estero. So welcome aboard, Rick. Okay. So here we go. This is the sleeper story. Remember, one of the wisdoms I taught you so far is what? The market only cares when it cares. Right now, it seems like, this is mainly the death of FANG, which we're going to talk about in a second here. It really doesn't, I don't think we're taking into account that and if the president, it's funny because if he does do this, another $200 billion, the market's going to, or the liberal, CNBC and the financial media is going to act like they're shocked that this happened. I jokingly said this about Iran the other day. Just because we ain't paying attention to these guys doesn't mean they go down in our holes and say, hey, nobody's paying attention. Let's go home and we're going to stop building our nukes. Same thing with this. Just because the talking coiffed heads on CNBC aren't talking about this doesn't mean that tomorrow morning, we're not down 600 points and renewed trade war or trade war fears. So we have to be in front of this market, not behind it. Okay, so we got to keep an eye on this China story. I don't talk about treasuries too often. I have a buddy who is a huge bond trader, but this, ladies and gentlemen, has got to be a canary in your market coal mine. Why? When the 10-year goes above 3%, what's that telling you? Or what should that tell you? That's telling you that there are large institutions, hedge funds or whatever, who think that it's a little safer to be in a 10-year treasury than what? In the market. So I'm going to teach you all these. That's exactly right, Brian. It's equity leaving stocks. So I've been up since the crack of dawn because I watched all the Apple stock on my phone calls and briefing and everything like that. Apple ain't going to save this market. Good beat, all that stuff. I was wrong. I thought they were going to miss, but Apple did the standard under promise and over deliver. They do it all the time. I don't know why I was shocked or the market was shocked by it. Here's my point. We are at an inflection moment in this market. And we talked about some of this yesterday. It is time. If you do not have a hedge on, man, there's a storm a coming. I jokingly say I'm like old Red in Kansas. When my knees start, aching, that means a tornado is coming. My knees are aching, folks. I don't think Apple's strong enough. And we're almost done with earnings, folks, to be honest with you. I don't think it's strong enough to hold this up. And when I see a headline like this, like 10 years, this is equity leaving stocks. Why am I dropping anchor on this? Because a lot of people said, well, if money rotates out of FANGs, it'll go into financials, it'll go into whatever, service. This tells me that money ain't rotating out of FANGs into other equities. It tells me money's rotating into safety. Does that make sense? So, okay, let's go ahead and press. I talked about the politics that are coming up here in a couple months. We already, exactly. In another 6 months, we'll start worrying about earnings again. Exactly. We talked this week also about how November is going to be, or October, November, the fall is going to be really volatile with with Iranian sanctions kicking back in, the elections here, and all that stuff. It's going to be nuts this coming fall. I really think, folks, this is the calm before the storm. I like this. I love markets going up. I love everybody's 401k. Everybody's happy at cocktail parties. But just know this, as an options trader, I really don't care if it does that, does this, or does that. We can make money potentially in any market condition. You bet. Steve, yes, it's really easy, folks. It's go.topgunoptions.com/getft, which means get full throttle. My phone's buzzing again. So yeah, welcome aboard to all the new folks. Mark, it'll be interesting to see if Kavanaugh is, I think Mitch McConnell, the Republican majority leader in the Senate is wanting to get him. He wants Democrats, especially like Manchin of West Virginia, on record as whether or not they voted for or against the dude. So that's some volatility right there as well. But I think Manchin yesterday signaled his support-ish. So if we get one Democrat, I mean, the guy's going to be confirmed. So I don't think it's going to be that big of a food fight as it was when the dude's name was announced. The guy's name wasn't even announced, and all the Democrats came out against him. I'm like, oh my God, whatever. Stocks gain as tech bounces back. Tech sector rises 1.1% on Apple. Does anybody think that, do you believe that Apple's business model is like Facebook? Does anybody believe that Apple's business model is like Netflix or even Google? Folks, just because a dude came up with the word FANG doesn't mean they all kind of trade in lockstep. Does that make sense? It's a completely different, they're talking about shipping iPhones, man, and all sorts of stuff. Apple's iPhones power revenue. This is why I was a little surprised by this, because what happened 2 months ago? Apple came out and pre-warned, which is what Facebook should have done, but they pre-warned and said, we will be shipping 20% less iPhones this year. Stock took a little bit of a hit. So this was an interesting beat, because standard Apple, we're gonna ship less, and oh my God, the world's falling apart, and then they come in and they blow it out. So, well, CP, I'm not going to get into that debate again, folks. There's people that spell FANG with 2 A's, meaning Amazon and Apple, Netflix, Google. Some people say actually the A's, Alphabet. I really don't care at this point, folks. What I'm trying to get to is that FANG ain't FANG. Those are all separate companies. Mark Zuckerberg's business model ain't Google's. Does that make sense? So, yeah, exactly. Maybe it's double A. So real quick, WTI, so yesterday we covered a trade on XLE. So it was a surprise build. So yesterday, let's start debriefing with that one. So this is 24 July. So this is our primary live trade brief from last week. Okay. So all new members, I want you to check out the good work we did here. We put on a new XLE spread. If you're not familiar with XLE, let me bring it up. XLE. It's the Select Spider Energy Trust. Okay, so yesterday, we legged into what is called an iron condor. And again, if you have no idea what that is, become a member, and I'm going to teach you what an iron condor is. But an iron condor is a range-bound trade, meaning I call it a football field trade, right? Here's XLE, Apple. XLE can run wherever the hell, just don't step out of bounds. So last week, let's take a look at the trade. We had an existing bull put spread on XLE. It was like the 70, where is it? The 74, 73 and a half. Okay. So the bottom of this channel, we had what is called a bull put spread, meaning I didn't think XLE by expiration was going to be below 74 and a half. But the other day, what was it, Monday? I sent out a text alert. I said, hey man, let's close this one. Why? Because we had this rip your face off rally right there. I said, let's get out of this one for 1,500. What was that? 78% profit. So I sent out a text alert on Monday to get out of the bull put spread. So very, very nice profits there. And then what happened yesterday? Last week we put on what? A bear call spread, the 77, 77 and a half out to next Friday. So yesterday somebody's like, hey man, that XLE, so yesterday there was this nice little pop. What did I say yesterday? This is a hold, right? I call them lucky strike moments. Everybody watch World War II movies where a guy gets shot in the chest, right? Calls for a medic, and the guy runs up and gives him a lucky strike. There's some good medicine. This was kind of a lucky strike. Not real. I wasn't nervous. What did I say yesterday? I said, this is a hold. And I also briefed you yesterday, and when you become a member, you're going to get this concept. Sometimes during the life of a trade, it's going to be red. It might be shown as losing money. So That's what I said yesterday. I said we have a crude report tomorrow. This trade's a hold, and look what happened today. It's down 1.5%, which is exactly what we want. So the 77.5. Let's see what that's priced at out to next 77. Let's see what it's currently priced at, because we might want to close this one. XLE. And usually we don't, I don't like mixing portfolios, but since we're in full throttle week, I want to show you all this stuff. Usually I'd just be talking about accelerated retirement trades. You know what, let's just hold on to this one. I'm going to hang on to this one because, well, first of all, take a look at the chart. And this might, if you're not in this trade, so here might be a free trade to some of the new folks. So here's a free bear call spread. We might actually leg back into an iron condor by putting on a new bull put spread. This is how, people like, how are you up like 75 grand in Amazon or all these? Because if you're just a stock trader, folks, you look at this chart and you're like, okay, Wiz, this thing's done nothing in the past 3 months. To you, it has as a stock trader. To us, we've been trading iron condors in here and knocking it out of the park. The XLE, the energy ETF, tends to channel until something really, really big happens. Iran announces something, or OPEC does this, or Russia announces that. Other than that, it does this nice trading range. So this might be our new trade for today, but we closed the bull put spread that we put on here the other day. We're hanging, so this one's closed. We're hanging in the bear call spread for next Friday, which could potentially make $2,100. And I might look to put on a new bull put spread. So that's probably what we'll do, but we need to look at CSX. But does everybody understand the concept? So if by next Friday, XLE is below $77, okay, what do we potentially make? Here's the risk. This looks, so this, if I didn't have this trade on right now, I'd like it. Okay, so this is a good looking trade. So it's right around my SOP, right? Don't want to risk more than about $5 grand-ish on any one trade. Now that I say, okay, I understand my risk, I know that's my max potential loss. Now I look up here and go, wow, by next Friday I could make $2,100 on $5,400 in risk. So this XLE bear call spread is a hold, and we might. Here's the total iron condor too, folks, and this is again, if you don't, all right, man, the dudes lose me with iron condor. Check this out. Here's what you're going to get. Where is it? Right here. So member content, full throttle. This will be your page right here. All you do is you scroll down to session 8, iron condors, and you sit there with your glass of Pinot Noir, and you get trained on iron condors. Okay, but I call an iron condor a football trade because it looks like what? Okay, where the hell was that trade? Right here. So here is that bear call spread, right? The 77 right here. Here's the short put that we closed the other day. I think it was the 74. This is also why I call an iron condor a football trade, right? Glass of sherry is approved. Here's the football, XLE. As long as this thing, I mean, hell, the football can hit one of these uprights. We've seen that in football games, right? As long as it goes in, right? But here's the sorcery I want you guys to see, that the magic in an iron condor. You ready for this? So, hold on, let me grab this. You see, this is a bear call spread that we placed last week. Risking $5,400 to potentially make $2,100, but that's not necessarily the truth when you're in an iron condor, and here's why. You fit, even Charlie Brown with Lucy, this football, the stock can't split and take out both your bear call spread and your bull put spread. It's physically impossible. So if you're going to lose on something, you're only going to lose on one of these spreads. So check this out. This is what the total iron condor looked like, risking $3,900 to make 36. So I actually lowered my risk. If I only did one spread, yeah, I'd be risking $5,400. But since risking 54 to make 2,100. This is just the right side of this upright. But since I had two of these on, the bear call and the bull put,
it lowers the risk and increases the potential profit. Again, if you feel like you're drinking from a fire hose, that's perfect. Remember, you're getting the eavesdrop in on a regular session. You haven't had your iron condor training yet. So if it's a little foreign, don't worry about it. We're going to hook you up. Okay. So this will probably be my new trade in a little bit, but I want to cover our existing trade on CSX. Okay. So this is last Wednesday, we did accelerated retirement. And as you can see, put the sound switch on, please. I think that's a problem on your end. Everybody's loud and clear. So here's CSX, and we talked about this last week. 72, so let's go out to AUG18 on CSX. This is our transport symbol, folks. If you don't have a Jan 20 or a long-term, and we talked about this yesterday, our sector targeting. So in our transport vertical, CSX is our puppy. Great earnings. This is what you want to see out of the stock. Gap up on earnings, and here's half the gap, right? What did it do? Popped up, went up a little higher. This is extremely bullish. Most stocks, after they gap, try and, what do they call it? Fill the gap. It usually comes back, and if it's bullish, it heads up. This didn't even do that, folks. It got airborne and has kept going. But I think that it is going to just kind of keep going, but within a range here. So again, this lends itself to an iron condor trade. So let's take a look at our current CSX position. So here's our bear call spread, the 72.74 out to AUG18. Let's pull that one up. Regular August expiration, that says AUG18, and it's the 72. Sell those and buy the 74s. Let's see what that's priced at right now. So that's at about, 36 cents, AUG18. And that's about what we got. We got 42 cents, 6 times. That's up about $200-300. So this is a hold. Okay. This is a hold. Let's not touch the bear call spread. That's looking good. Now let's look at what the bull put spread is. Here's the total iron condor on kind of one ticket. Here's the bear call spread I just reviewed, the 72.74. Let's take a look at how the put spread's doing, the 67.5, 65. Let's bring that up, 67.5, 65. And this is a good looking iron condor here, folks, the 67.5. Sell the 67.5, 65. Very good looking iron condor going right down the fair. That's awesome. So that's obviously looking, this is, man, that's pretty profitable. I'm going to hold this. Let's just, guys, this is a hold. I like potentially making $2,400 in about, a week and a half to 2 weeks. So here's the total iron condor on CSX, folks, right here. Risking $5,100 to potentially make $2,400. This is an iron condor I would look to add today if I didn't have this on. So good looking XLE trades, good look, and we'll get into an iron condor and XLE here in a minute. CSX, let's hold this iron condor, no changes. Okay, here's what I really wanted to cover is this Amazon bull put spread. You bet, Sandra. Make sure you watch the replay since you got a split. So let's talk about Amazon since that seems to be the Death Star. Okay, now when I placed this trade, what did I say? I said this kind of technically isn't a new or actually an earnings trade, right? But this went through earnings. So look at this, Amazon, 1,800, 1797.5 bull put spread. Let's just bring up Amazon's chart. So Amazon's a Death Star, folks. I can't say enough positive about Amazon. I can't wait for Tesla earnings. That's going to be, grab your popcorn for Tesla earnings. Awesome. You bet. Welcome aboard. CP, that trade was, I reviewed an existing trade. That wasn't a new trade, so I didn't blast out a text alert. I just reviewed the existing iron condor, and it's a hold is what I'm saying. Okay, so let's take a look at Amazon here. Last week, I put on, could you show the CSX trade one more time? All right, real quick, I'll show the CSX. The total iron condor is this, guys. If you need to take a screenshot or anything like that, it's, there you go. There it is up close. So this is a trade I'd look to put on today, guys, if I didn't have it on. So this is an existing iron condor on CSX. So everybody got that? And like I said, folks, if this is fast or, oh my God, remember, you should feel like you're drinking a little from a fire hose. Yeah, you're welcome. Absolutely. You bet. Welcome aboard, Amy. Yep, absolutely. What part of Chicago? Amy and Annual Max, welcome aboard. Oh, cool. Yeah, I lived out in Naperville. All right, guys. So let me focus for a second on Amazon here, because this is important. I put on last week, we looked to put on an 1,800, 1797.5 bull put spread, risking about $4,700 to potentially make $2,900. Okay. So now let's take a look. Why did I pick 1,800? This is a very, very critical number here for Amazon. I'm going to, if you're new or you haven't signed up yet, listen, the market likes round numbers, whether it's the S&P 500 or it is Amazon. It likes what? It likes 15, 16, 17, 18. So look at 1,800 here. It was, let me just drop a line there. Hold on. Horizontal. So the horizontal. Where's 1,800? Right there. Close enough. So and then let's go down to let me drop a line on 1,700-ish. Look at this, folks. These round numbers, call them magnets. Just mentally think that they're magnets, whether it's humans or algorithms. Look at this. It got pulled up from 1,600 to 1,700, through it, underneath it, rally out of it, underneath it, and then got pulled up and did the exact same thing. What? To above 1,800, underneath it, above, underneath it. I believe 2.5 weeks from now, folks, we aren't even going to remember Amazon earnings, and it is going to get back up on its horse and ride up to 1,900. So this is the second time in this webinar I said that. So during the life of some of these trades, I briefed you on this last week. If you weren't here, make sure you watch the replay. I said, hey man, during the life of this trade, Amazon, I'm pretty damn sure is going to go through 1,800 again. I absolutely said that last week. So this is one of those discipline moments, right? That's what I'm going to teach you here at Top Gun Options as well, is to have discipline. Brian, you read my mind. Not only are we done with earnings, they're going to start talking about what? Christmas, Kwanzaa, winter solstice. I don't care what you celebrate. We're getting into the fall here. So I believe that this is easily going to be back above 1,800 in a couple weeks. We're going to forget about the FANG implosion. Remember the last time we've had FANG 2.0? We had an implosion 8 months ago. We had another one. Amazon weathered them pretty good and then got back up on its horse and galloped away. As I said, I don't believe Amazon's a FANG. So let's take a look at this existing trade and see where it is priced. The 1,800, 1797.5. So let's do this one and see where it is, because I have no problems with it. So the 1,800, 1797.5. Okay. So it's all the way up here. How many contracts did we do? 30. So folks, this is, if I didn't have this trade right on, this is a good looking trade. Look at it. So I'm risking whatever it was, $4,800. You'd be risking a lot less and potentially making a lot more. Okay. So, Ben, I have good question, Ben. I have adjust and eject levels, as I briefed the other night, in every trade, right? But Ben, like I covered Monday night in my trade planning, if my commit criteria or my strategic mindset, that's what I'm talking about. So since last week, this Amazon bull put spread, it hit its adjust and eject criteria. And you know what I did? Nothing. Well, shouldn't you adjust? No. So those two levels, ladies and gentlemen, so let's drop anchor here for a little bit. Those are what I call pilot and command moments. Nothing between last week and this week changed my mind on Amazon or made me like it less. Okay. So if it does hit your adjust and eject and you got no problems with it, you stay in it. Okay. But between last week and me sitting here today, I don't know, Jeff Bezos started spouting off on Twitter and became one of these limousine liberal CEOs. And then I would have gotten out of stock because my strategic mindset and commit criteria would have what? Changed. So it's a very good question, but you have to use your thinking brain. Does that make sense? So great question, Ben, but nothing changed. This is the discipline, folks. This is why, if you weren't here at TGO and you saw this trade, you probably would have bailed out of it already. There's no way in hell I'm going to bail out of it. That's exactly right, Mark. So remember, Ben, when I talk about an SOP, the first page of every SOP in every Navy fighter squadron says, hey man, nothing in this SOP takes the place of good head work and judgment, meaning you can violate these rules in here, but you better have a damn good reason. So the damn good reason is a little bit of a tech wreck. This trade has what? 1 week, 2 week, 2.5 weeks to work out. If you don't think Amazon's going to get back on its horse and be up here in 2.5 weeks, then by all means, get out of the trade or get bearish on it. I absolutely disagree with that. So this is a good, what we jokingly say, Obama teachable moment here. This is everybody's seen the movie Braveheart, right? I call it a hold moment. I think I actually have a screenshot of there it is. Every once in a while, I'll send this out in a trade alert. So I have no problems with this trade. It's showing up as a loss rate now. I don't care. I care when it expires. Why have an eject level if you don't actually exit the trade when it's hit? Randy, I just tried to explain all of that. If I'm sitting in my F-18 cruising along and all of a sudden I have 2 engine fire lights come on and we call bitching Betty in my headset go engine fire left, engine fire right. The book says if you have a dual engine fire, eject. But guess what? I don't smell smoke. My wingman, hey dude, am I on fire? No, you look fine. And my exhaust temperature in my engines is normal, it's probably an electrical issue. So Randy, what I'm getting at is those, and a bunch of my members are chiming in, the adjust and eject levels are advisory, meaning you are flying your airplane, Randy. I'm telling you what I'm doing with mine. I ain't going anywhere with this spread. So Arthur, my eject kicks in 1 week or so prior to expiration. Exactly. So, exactly, Brian. It's a heads up and watch it. But like I said, I don't want to drop anchor here too long. I said last Wednesday, during the life of this trade, there's a good possibility it goes below 1800. But all I care about is when it expires, I think it's going to be up here. So if it hit my adjust and eject, I stayed with it because I have no problems with it. Okay, yeah, you bet, guys. So the smart folks are looking for a free trade here. I like the way you think, though. Virginia, you make sense. Earnings rolling down now. So exactly. I get in this trade today. There's no problems. So it's the 18. Remember, folks, the reason I used 1800 is because that's a magnet number. We busted through it, almost went up to 1900. Now FANG implosion, but no FANG implosion. So I think the next number for Amazon is 1900. I mean, obviously 1800, but you know what I'm getting at. The next magnet, Amazon's going to be pulled higher, guys. Even if Donald Trump comes out and starts pounding it again and making fun of it and everything like that, it's going to recover. That Jeff Bezos, I was at an event last night. I was talking to people about this. I'm like, that dude has been as quiet as a church mouse. He hasn't gotten in any of these, Zuckerberg, Tim Cook, what's his name from Tesla. He's been flying under the radar. So he's been focusing on his business. This stock is at 1900 easily by September, October. Okay. Exactly. Elon Musk is, exactly. So, all right. So that's the existing Amazon trade we have on. It's showing a loss. I don't care. This is why we call these live trade briefs as well, folks, is in a brief, we cover everything that could go wrong during a flight or right. So, and if you've ever listened to an air-to-air mission, it's eerily quiet. Well, I watch Discovery or A&E, and there's guys yelling over the radio.
The only time you come up on the radio and talk is if something isn't going as what? As briefed. Does that make sense? It's really quiet. If everything's going as briefed, I might not even talk the whole mission. So this is what I'm getting at is, if you haven't heard from me, hey man, I'm going to roll this trade, I'm going to adjust it, or I'm going to eject, I'm in it, man. I got no problems with this. So Amazon sees 1900 before it goes down and sees 1700. You got it? So good. Yeah, Amy, awesome. Welcome aboard. My phone's buzzing. So guys, as I'm talking, people are literally grabbing their slots. I'll go into more of the full throttle stuff tonight, but yeah, you bet, man. The link's right here. go.topgunoptions.com/getft. And I got to be honest with you. Last time we did this, we were going to. I almost canceled the Friday because we got our. Greg, you could do that too, and K3, you could do it as well. You guys, I'm talking about an existing Amazon trade. If you want to put a little altitude underneath this thing, yeah, go look at the 1780, yeah, you can go down here. I'm talking. So, folks, at this point in our webinar, I'm reviewing existing trades. If I were to put on, so I have this one. If I were to put on a new Amazon K3 and whoever just said that, yeah, I'd be looking down here where you guys were plumbing. Absolutely agree. Good call. I agree with that. But I'm just talking about an existing trade. If you guys are talking about Greg and K3 are talking about new ones, I would absolutely do that. So, all right. Yeah, John, that's a good point. But I want to stick to an hour because I want to treat people with the time here. I want to get this. I want to leg in here into an iron condor. But we're back in. So we closed out. We're back to energy, guys. Here's our new trade for today. We got out of the bull put spread for $1,500. We're holding the bear call spread. Let's look at a new bull put spread out to next Friday on XLE on the energy. So let's take a look at the options chain. And let's go down to, let's take a look. What's the lower part of that channel? It was 70. Our last bull put spread was 70. Was it 75, 74 and a half? Let's at least start there. 75, 74 and a half. That looks pretty good right out of the gate. I priced this before market open. I haven't looked at it since. So let me just look at our metrics real quick. Boom, right down the fairway. All right, guys, here we go. So we have an existing bear call spread. So me doing this bull put spread, the term is I'm going to leg into an iron condor. Cue the salesman. If you don't know what an iron condor is, you're going to get absolute training on this, folks. I don't tell you to, hey, let's go do a close air support mission, and you've never done a close air support mission. It's suicide. It's stupid. Okay. Brad, this is a good standalone trade as well. So Brad's using his thinking brain and saying, hey, Wiz, is this a good looking standalone trade? It is. Let me go through it. I'm going to look to sell 150. Why 150? Give me 2 minutes. Of the August 10th expiration. Why August 10th? I have an existing bear call spread that expires this day. So I want to make this a nice looking iron condor. 75 puts. Why did I pick 75? It's kind of the bottom of this channel here, folks. 75, 74 and a half-ish has been kind of support-ish. Okay? So that's why I picked 75. Me selling these puts is saying, hey, XLE, by next Friday, I don't think you're below 75. Okay, Wiz, I get that. Well, what if you're wrong? Oil becomes like water and it's free and the XLE implodes. Well, good for us, but bad for the trade. We're going to buy what are called downside puts, right? This is our hedge. This is why it's called a spread. This trade has limited risk, not unlimited, limited. Okay? So I'm neutral to bullish on XLE. I'm using puts, and it's a spread. So this is called a bull put spread. If you're looking down here already, you also know it's called a credit spread. We are getting paid to do this. We're getting paid about $2,000 to do this trade. We're the Ferrari dealer down here in Fort Lauderdale. Bull put spread. Let's try and go mid-market, which is a credit of 13 cents. So let me grab a screenshot of this so I can put it in the replay email. Let me grab this. XLE with the date. File, save as. XLE. What's today's date? 8. My God, it's August. Man, my boy leaves in a couple weeks. So he's killing me. All right. So let's go ahead. Now, I told you this yesterday, and let's go plus or minus a penny. I'd look to get filled at as low as 12 cents or as high as 14 cents. When I click this Analyze button up here, there's one place and one place only I want your eyes to go. And remember, jokingly yesterday, I said I'm going to turn into a Catholic nun. I want your eyes to go to Max Potential Loss. You ready? 3, 2, 1, right there. So if you're sitting there a couple minutes ago going, where the hell, why is he trading 150? That's because that's my max risk, right around my SOP of not wanting to risk more than $5,000. Okay, so that's exactly. I don't think they still make nuns. So that's our max loss. If that ain't acceptable to you, don't do 150. Do 1, do 1,000, do 0. I can't give you that advice, folks. You got to talk to somebody a hell of a lot smarter than me. But at least we know our risk is limited. If the XLE absolutely implodes, the most we can lose is that. Okay. Now that we've done our job as an options trader and fighter pilot, now we can look at Mr. or Mrs. Happy Face and go, okay, that's my max potential gain, $2,000. And if you look at these percentages underneath, this is using current at the money volatility, spot volatility in the XLE options as I'm talking to you. So there's a 69% probability of making $2,000. Okay. Correct, Martin. It's 5% of a $100,000 model portfolio. Even though I don't, at any one time in the model portfolios, I don't ever, never in the history of my life have I fully been invested with $100,000. I have about 40 to 50 of that sitting on the side as dry powder. So I do the 5% still based on that, even though we're only deploying about half of that. I keep a lot of ammo dry, folks. Okay. So here's what's cool, and I mentioned this yesterday with our bull put spread. You make money 3 ways in a bull put spread, or in 3 scenarios. You ready for this? So this blue line is the current stock price of the XLE Energy ETF. It can do what? It can go up. It can just hang out where it is, kind of channel like back here it's doing. Folks, it can even go down a little bit. Whoa, I thought we could. No, as long as it stays above our break even of 74.87. Okay. So, no, Chris, the probability, these numbers right here are based on at the money volatility in the options, in the XLE options. So this is pretty cool, folks. I got to grab a screenshot of this. A bull put spread, you make money in 3 scenarios. The only way you lose money is if it goes down and it goes through our XLE, that long put. That's our hedge. But our risk is limited. We know this. And if you're really smart on iron condors, you know that our max risk ain't $5,500. Why? Well, I started this session with an explanation of an iron condor and told you that what? We can't lose. So one more time, got out of this bull put spread, $1,500, holding this bear call spread we put on last week, and now we're putting a new one on right here. So again, the max risk in this spread is not going to be whatever it is on that ticket, $5,500. It's only going to be about $3,600 total. Why? Because we can't lose on this spread and that one. It's physically impossible. Like I said, even laughingly, Charlie Brown ain't that unlucky. Okay? So legging into an iron condor. And if I lost you, I confused or anything like that, don't worry. This is why we have the training. Okay? So legging into an iron condor. And tonight, I think for training, I don't think we're going to do vertical spreads because I just did one yesterday and I did one today. Didn't do the hour in depth on it, but it was a pretty good brief. I think tonight we might actually I might show you how to do one of our Jan 20s, and maybe we'll take a vote tonight and see which one you want to do. CSX, Raytheon, maybe even a Wynn Resorts. And we'll talk about earnings and what's going on with that one. This kind of it's doing kind of a Raytheon here. The Macau numbers weren't super sweet. Macau casino operators in the red despite blah, 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 blah. You know what? Let's talk tonight about which one we're going to do, which Jan 20 you guys would want to see, potential new members, okay? So, yes, I will talk about that. What is Raytheon doing today? Yeah, doesn't that look like Wynn? Hold on, let me pull this up real quick. That's a pretty similar looking chart. They're doing the same thing. So we'll talk tonight at 7 o'clock about which Jan 20. I want to show you a tactic tonight where we literally can hop in our F-18, go the speed of, or twice the speed of light, according to Newsweek, go out to Jan 20 and get bullish. But we can have two strategic mindsets in the tactic I'm going to teach you tonight. You could be long-term bullish, because I think by Jan 20, Raytheon's going through the roof. But right now, in the front months up here, I'm kind of neutral to bearish on it. Isn't that cool? So that you got to come tonight, folks. And if you have no idea what a long call diagonal is, or you just, I buy the stock, I'm going to show you tonight that you will never buy another share of stock when I show you this tactic tonight. Okay, so we'll save the long call diagonal for tonight, and maybe it'll be Raytheon, maybe it'll be CSX, but I think we did a pretty decent job of covering our front month spreads. Exactly. If you're traveling at the speed of light, what happens when you turn your headlights on? Exactly. I once put instant coffee in a microwave, and I went back in time. How is VXX before? Because I want to finish on time and on target here. How's VXX looking? So the bear call spread we have on, guys, it's out to AUG 10. Let's take a look at this. The 33 and a half, right? 33 and a half. I think we're going to, yeah. So we got into it at 13. It's up 5. What's that? $750. Yeah, Deborah, that's one of the reasons I got to stop right at 2 o'clock too, is the FOMC minutes. Yeah, absolutely. Randy, how do you choose the underlying? Randy, that is a phenomenal question, and I'm going to table that one too tonight. I'm going to tell you how I pick my underlyings. And I'm also going to tell you, Randy, how many trades, if you have more than 5 to 10 positions on as a retail trader, you're damn busy. As a pro, 15 to 20 is about maxing out your cockpit. So I'm going to tell you, Randy, how I pick mine, and you should only be trading stuff you know. I have a couple doctor buddies down here in Boca that joined recently, and I took my look at the one guy's portfolio. He had like 33 positions. I'm like, are you? And he's doing surgery throughout the day. I'm like, are you high? I'm like, what is it? He didn't even know what half the positions were. You know, I heard it at a water cooler or from a patient. So Randy, great question, and we're going to cover that. You should stay in your lane. So Randy, what I like to do, and I like to teach people here at TGO, is that if we have a Jan 20, if we're long-term bullish on Raytheon out to Jan 20, so you have a strategic mindset. Wiz, I agree. The defense sector and Raytheon are going to go through the roof. Why would you just put a Jan 20 on? Why aren't you trading the front months? So we do. So Randy, we stay in a couple lanes, so we know this stuff like the back of our hand. So like that sector targeting brief that I gave you yesterday, I'll tell you where a lot of that came from, but we should only be trading the front months in that. Okay. So yes, thanks Deborah for the reminder. I do need to these Wednesdays when we have FOMC, I have to jump on my my hedge fund call because we might trade what the Fed is saying. So a couple more slots went. And we're gonna see them trickle in as the day goes on. If you want to wait until you see tonight and what the training looks like, I'm pretty sure by now, even after just 1 or 2 sessions, you kind of get a flavor for what we do here at Top Gun Options. And as I said, if we don't fill all the annuals by Friday, we'll probably open up some monthlies. Okay, so here's what I need you to do as soon as we get done here, and I'll send the replay. I'll have the replay posted on this page probably after the Fed call. Not this page. This page. It'll be up. It'll be down here. So the replay will be on this page. Whenever you're ready to grab your slot, go ahead and click that green button, and you can go grab it, or you can just go directly to that page right now. Okay, like I said, this is the best deal here, folks. If you want to do month to month, it ends up costing a little bit more money. So an annual max afterburner slot is a pretty damn good deal. And like I said, that's about 85% of our current membership. Some folks start in defensive or start, and usually everybody ends up in here, just so you have access to everything we do here at Top Gun Options. Okay, and all of that stuff is on this page. So, and that's my phone ringing. All right, guys. Like I said, welcome aboard to all the new members. I love the fact that some people, quote unquote, snuck in. They really didn't sneak in. They just looked at the replay page and said, all right, I'm ready to grab my slot. So I got to go and jump on this phone call so we can talk about the Fed stuff. We'll talk about that tonight as well. I never do any live trading sessions without kind of a real world brief beforehand. So we're going to talk about all that stuff. You're welcome, Tim. You're welcome, Lee. So bring your questions tonight, and I will see you guys at 7 o'clock Eastern tonight for some full throttle training. And we're going to do a long call diagonal. Since we've done a couple bull put spreads this week, we're going to do the long call diagonal. Okay. So, all right, folks, have a great rest of your day. Happy hunting. Make sure you hedge, and welcome aboard to all of our new members. Looking forward to getting airborne with you guys. So I'll see you guys in a little bit.